Hello everyone, and thank you for joining us today for this webinar on best practices in license agreement compliance presented by our guest speaker, Deborah Stewart. Deborah Stewart is a CPA and the Managing Director of Invotex IP. Deborah has been working in the intellectual property consulting world for over 25 years. She has worked with clients and their counsel testifying to both damages in IP infringement matters as well as breach of contract issues revolving around IP licenses. About 15 years ago, Debbie saw the need for a specialized royalty audit firm to work in the complex technology space with clients that were interested in receiving their appropriate royalties while maintaining a positive relationship with their licensees. This was the catalyst for Invotex IP, a consulting firm that specializes in royalty compliance. Her firm is known for their publications of their royalty audit finding statistics, as well as their ability to uncover large underpayments while relationships are preserved. Now, before we get started, I'd like to ask that everyone please keep their microphones muted, and if you have any questions, please type them into the chat box and we will go ahead and answer them during the Q&A session at the end. If we by chance do not get to answer every question in the chat box, Debbie will answer those offline. So at this point, I'm going to go ahead and turn it over to you, Debbie.
Well, thanks so much, and good afternoon, everyone. And I want to thank Foresight for having me. I appreciate being able to present this webinar to all that are listening. She gave a very nice introduction on me, so I won't belabor that, but I am the Managing Director of Invotex IP, and our firm specializes in compliance issues, full royalty audits, desk audits, and then assistance in setting up or reviewing compliance systems. So what we're going to talk about today are the best practices in license agreement compliance. And the way we break them down would be starting with your contract languages to put everybody in a good position, setting up a compliance program, and then the use of examinations audits, meaning desk audits and site audits, to assure compliance. So contract language is the starting point. And this is the most important because then you start in a position of strength. And in general, I'm not going to say anything earth-shattering that y'all haven't heard before, but hopefully I'll give you some specifics you can take back and use. But in general, the idea is to be very specific and to tailor your individual license to your individual licensee. I think a lot of people have templates, and that's great to start from, but then they don't take that extra step of making that template very specific to the licensee as well as the industry the licensee is working in. Terms should be very different for companies that are going to sell a pharma product versus a manufacturing product versus a software product or a chemical or a service. There's different things and different nuances on how royalties will be calculated that the terms should be specific to. So the first one, which is the one everybody always thinks about when you think about royalties, is sales. And most licenses do have a definition of net sales, and so this is our suggestions about that. I will point out that I am a CPA and I do royalty audits, not a lawyer, so nothing in this, my lawyer will be happy for me to say, nothing in this presentation should be considered legal advice. Just what we see when we review royalty payments and license agreements in our audits. But people, okay, so in your definition of net sales, you have your definition of gross sales to net sales. And what that means is there's a gross sale of what a product is, like the list product, and then there's certain deductions that are taken from that product to get to net sales. And what you allow people to pay royalties on is generally based on net sales, and the deductions are what you decide is acceptable. You also are very interested in getting third-party pricing, which means you want it to be to the final customer or a party not related to your licensee. An issue of cash receipts versus accrual, and I understand that this isn't an accounting webinar, but in general, everyone's on the same page. I see lots and lots of license agreements that say net sales equals cash receipts minus certain things. Well, cash receipts is actually after all the deductions are taken. That's the money they get. A lot of people are under the misconception that cash receipts means sales. Cash receipts means the money that you get in from those sales. And I would say it's an idea to use that in your license agreement, because that it requires people to track when they get the cash in by product as opposed to when they sell a product as an invoice. So when a company sells a product, they create an invoice, and that's the system of accounting, which is what the world runs on. So you want to stay away from the words cash receipts. The next line, again, is revenue recognition versus invoice versus cash. Again, I don't mean to make this an accounting webinar, but revenue recognition, while you don't need to understand it, you do need to understand that certain types of sales are recognized by a company at different times depending on what kind of sale they are. So if it's a company that's selling software or licenses or has some kind of contract, they're going to sell something for, say, $1 million on day one, but they're not going to, and that what they sell has a 5-year term, can say. So what that means is they're only going to recognize that $1 million over those 5 years. And what they pay you royalties on may be just on the $200,000 each year, as opposed to the $1 million of when they received the cash and when they made that sale. So based on what industry you're licensing into, you just want to know that and understand that and make sure your license agreement is clear on that point. I've also seen license agreements that use some kind of profit or gross, and I would very much suggest that people not do that. It leads to people being allowed to allocate all kinds of costs associated with this product or not in your royalty base. So I would definitely stay away from allowing any kind of profit in the calculation. Foreign sales, many people in their definitions for your licensed product or for licensed patent, it does mention things about infringing the patents. And if it infringes a patent, that means if it's manufactured or sold in a certain country. But then when they go on to talk about their sales and what's paying royalties, they say things about only it's sold in a country that has a valid patent. But that forgets about the part about manufactured in a country that has a valid patent. So be very careful when you define your that it includes products that are manufactured and sold in countries that have a valid patent. Unit versus most people do it on a percent of sales as a dollar per unit. I would stay away from dollars per unit. It's much more difficult to track than revenue. Promotional units and premiums, lots of companies put products away. I would mention if anybody's not on mute, they might want to mute their phone because we're kind of hearing some background noise. But sorry, moving on. Promotional units. So people, if they're giving product away, you want to, that's either okay with you or not okay with you. And if it's okay with you that you don't receive royalties on products they're giving away, you might want to limit that to a certain amount as opposed to a sort of a blank slate. They can give away anything they want and not pay you. Continuing on with net sales, since that's the most important definition, a lot of people think that putting the words in accordance with GAAP saves them and is helpful to them, but truthfully it's not helpful in any way because GAAP can be very broad and interpreted in many different ways and can be changed through time. So while it may seem comforting to put those words in your license agreement, it's not really that helpful. When you're talking about your deductions, a lot of people think customary is sufficient. It's generally not sufficient. That just leaves the door open for them to do anything they want and they consider it customary. I would be more specific. I don't like to tell people what definitely not to do, but I would say it's opening a can of worms if you allow them to take the following deductions. Commissions. Commission can be a huge number. It can vary. It can change over time. It opens up a can of worms to allow them to use that as a deduction. I see lots and lots of license agreements that say other freight or delivery costs. That's just a crazy thing to put in there that lets them do pretty much anything they want, meaning I've seen people use freight for internal transfers of raw materials or delivery costs between factories or warehouses. I wouldn't put anything like that vague. If you want to allow them to reduce freight, I would allow it to say something like outbound freight to customers included on invoice price, or something like that. That's something that's very specific, and that it must be included as a separate line item on the invoice. People tend to put bad debt in here as well. It's very hard to track bad debt by product, and I just wouldn't allow it. The same with services rendered, and that kind of goes with the next one, which is Group Purchasing Organization, or GPO. Those of you who license into the pharmaceutical industry might be more specific with that, and it's a very specific pharma issue. And a GPO, almost all medical devices and drugs are sold through GPOs. And GPOs are like group purchasing, so they allow for discounts. But what GPOs also do are provide a great deal of services, including inventory management, warehousing, AR management, and other services. And so what the GPO does is it charges a % for all those services, which also includes discounts. And if you allow for that deduction, then all of those expenses are come out of your royalty base. Something else to note is that GAAP allows for the GPO discount, so all those services to be included in the deductions from gross to net. So if you go with just what the GAAP is allowed, that means that the GPO fees can come out of that as well. In the definition of product, I would just say be all-inclusive and clarify as much as possible. Nobody knows where your sale of your products or your technology will go in the future. You might be selling it today, but they might later rent it or do a service using it. So just be as all-encompassing as possible based on the technology you're licensing. Clarify that your product is manufactured entirely or partially in a patent country. Lots of people do filling in a certain country, like they move their production around, and so you just want to be clear about what is royalty bearing and what is not. Disposable products and giveaways is a big issue that I think people lose sight of, and it goes along with the next one underneath of it, which is consider the economic value of the technology. So lots of it, I think people know it as a razor blade. There's a product, a razor, that may or may not be patented, and then the razor blade may or may not be patented. But in most cases, it's the razor that has the patent, and the razor blades are sort of disposables that are not patented. And if you are only charging royalties on your razor, you have no control over where they earn their money. So in the medical world, lots of times the machines are almost given away, or given leased, or gotten into the market very cheaply so that they can sell these disposable products. And that's where the economic value is. And if you're only receiving royalties on the machine and not the disposables, you're losing most of the economic value. That also is tied to insurance reimbursement quite a bit. Combination products is the largest reason for underreporting. People reduce or just say it's a combination product all the time when it may not be. I would be very clear in your license agreement if they are allowed to do combination products that they must tell you on the royalty reports, and they must tell you how they're doing the apportionment, and they must get an approval from you on how the apportionment will take place. It's very rare for a combination product to be sold separately. If it were sold separately, it wouldn't be a combination product. So that's sort of the vague nature of coming up with the apportionment of a combination product. I would err and do lower royalty rates and do not allow them to do a combination product, and I think that would save everybody a great deal of hassle and make royalty reports more correct. Then sublicenses and affiliate sales. So there's lots of things that people consider sublicenses, but many of people don't consider distributors, joint marketing agreements, joint ventures, cooperative agreements as a sublicense. But truthfully, the way they generally work is they are basically a sublicense just gone by a different name. And if you allow for these things, it generally leads to you getting paid on transfer pricing as opposed to the full price of the product. So you just want to be clear as to if they're using any of these types of setups or anything similar, that you get the price of the final product. Sublicense fees. I've seen a lot of times when people are allowed to sublicense, say you're giving a royalty percent of 4%, but then you say but I want 50% of any sublicense fees you get in, and they sublicense it at 6%. So that means you're really only getting 3% on the final product. I would suggest strongly that you should get the same royalty from either the sub-licensee or the licensee, whomever sells it, and make that clear. And then you want to also make sure you get your clear share of any other fees being paid at whatever percent you want that to be. I would also be clear that you have to approve and at the very least get a copy of all sub-licenses out there. Oftentimes when we do an audit, it's a big surprise what sub-licenses are out there, and you may or may not be happy with the results. You also should make sure that you have the same audit rights in the sub-licensees agreement as you do in your licensees agreement. Therefore, you have some control to make sure that you've been paid what you should. Other economics to consider is if the entire company is sold. Oftentimes companies are started around a technology you license, and while you're getting your share of royalties for that one product company, they may sell the entire company or an entire division that's around your product, and you really don't get any of the economic value from that you actually created with your technology. So you just want to be clear about what value you're bringing and what you receive from that. The other thing about economic value, I've seen where you license a certain technology and they're selling, a product, a test, maybe a test that does it, but then they change their whole business structure and they just start doing research, outside research for other people, and they're charging them to do big research projects, which includes using your technology to run certain tests, but they don't pay you anything for it because they're not receiving revenue directly for that. So you want to write your license agreement that if they use your technology to receive any economic value, you get some percent of that. Reporting requirements. And a lot of people are stuck on the calendar year, and I would be very specific to whatever their fiscal year is. So if a company's fiscal year and calendar year is the same, that's fantastic. But if their fiscal year, I know you don't license to retail, but retail's fiscal year generally ends January, the end of January. Or whatever that fiscal year of that company ends, you should work your royalty reports around every quarter of their fiscal year. It'll lead to better reporting. The same thing with the template that you give them. I would suggest that you give them a template for royalty reports that's in Excel file that you want back every month or every quarter with that filled out. And on that you should have the math already worked into it, including the date that they hand it to you, the date that it's sent in, and in there should be a calculation of interest. If they send it in 2 days late, there should be an automatic interest payment calculated on your spreadsheet. It's not really hard to do in Excel, and it will get people to pay you on time more often. The audit or examination provision, you want to make sure you have full access to records. You can specify a time frame where they must keep their records, which is generally, people say 3 to 5 years. If you don't say anything, a lot of people are under the conception or misconception that we can go back forever. But the fact is, people's records are generally clear for 3 years, and that's a typical audit period. To go back further is a lot of undue hardship on the person being audited, and probably not a great idea. You also want to have the words ability to audit for completeness. The word completeness are really kind of important to make sure that the auditor can look at everything they want to look at. There's usually a confidentiality part of it. And then who pays for the audit? A typical would be any underpayment found in excess of 5%, then the licensee pays for the audit. I mentioned the 3 years, and then the ability to audit sub-licensees. In others, we want to talk about the treatments of payments. I would strongly suggest that you say non-refundable, just to have that covered in there somewhere. A lot of licenses allow for some kind of allocation. If it's a drug that's for certain indications, there's certain allocations for that indication, or there's market research. Those are very difficult to pay correctly and to audit, and I would just be very specific about that and try to have some communication yearly with your licensee about how that's being done. A lot of people are worked up about foreign exchange rates, and they like to write in their license agreements, the Wall Street Journal rate or some rate or what day it happens. And I would say you really don't want to get into that detail. What you want to say is that you want the foreign exchange to be done on a consistent basis throughout the entire life of the license, and it should be of terms that their outside auditor agrees with, and that should cover you. Another thing people generally forget about is termination and inventory. So you're licensing them the ability to manufacture as well as sell. So on the last day of your audit, the life of your patent is over, and they have some product in inventory that they have manufactured but they have not sold. But you've written your license agreement that they only have to pay on sales, so you don't collect on that. So there should be some term in there that at the termination of the agreement, when the patents are expired, anything in inventory, you get your royalties on as they are sold out. The next section is how to implement a compliance program. And so in general, I think most people on the line are nonprofit institutions. I do audits for nonprofits as well as for-profit institutions. You know, you've licensed something for royalties, and it's only appropriate that you get what you have negotiated for, and that's what a compliance program is really about. So to set up a compliance program, sort of the basics that make sense. What a lot of people forget to do is they treat all licenses the same, and all licenses are not the same. Some licensees are blockbusters, and some are not going to ever sell any product. So I would really start with stratifying your agreements, so the ones that are bringing in the most money are getting the most scrutiny from you. I'm not saying you forget about the other ones, but you know, there is a sliding scale and there is a limited amount of time you have. Milestone trackers, that is something you can do on your own. Oftentimes, you know, people have forgotten they entered into this license agreement with you and are not tracking the milestones, so that is something that you should track. Again, and tracking when you receive your royalty payments, again, going to your highest level licensees first and making sure those come in, but then having a checklist to make sure all of them have come in. And having a current list of whose sub-licenses there are, and making sure you're getting that payment as a roll through. And then you should keep contacts of all levels of people that are at your licensee, low level, the people that are doing the royalty report, and then the higher level, the decision makers. It's good to keep that open communication with them, try to talk to them whenever you can. I think I've talked about charging interest already, but you know, as people, we all know which of our bills charges interest, and we all would probably agree that those payments get paid on time, as opposed to the ones that probably don't charge interest, they can lag behind. So it's just human nature to pay people who are charging you if you pay them late. Okay, review your royalty reports. When you get your royalty report, lots of us just want to cash the check and be done with it, but you really should look at it a little more carefully. You should request the Excel files that you've given to them, hopefully, but if not, if they're doing their own, request it in Excel, and that'll make it a lot easier to look at trend analysis, recalculate, make sure the rates are correct. You should keep current with your licensees in the news. You know, you can see a lot of stuff about M&As. Google, you can set up alerts that have to do with your licensees, so you can see if things are happening out there, new product launches. New product launches is the #1 reason people forget to report royalties. You know, they've got a certain product, but then they put a new product in there, and the person paying you royalties has forgotten to put that new product on the list, and you can't really see that when you get the royalty report because it's just one big number. So if you notice there's a new product launch, you can drop them an email and just make sure that that's on the royalty report. I would say if you have any questions, you should ask, but I would say even if you don't have a question, ask, because it's just good to acknowledge you've gotten the royalty report, ask a few questions, make sure people understand that you are reviewing these and you are looking at it. If you choose to conduct a royalty examination, a lot of people say, well, when should I do it? And in general, when you have at least 3 years of data and you're getting at least $100,000 in royalty income a year, that's sort of a good point to think about doing audits. The audit should not be contentious in any way. You should use an auditor, or you should understand that it's a partnership with your licensee and that the auditor should understand that. And you should have an auditor that will work with your licensee to understand and cooperate and collaborate with them for the whole audit process. It will It will make everybody happier, and you'll have better audit results. People who are happy and friendly find out a lot more and are much more willing to give information than those who are being forced into something or just not happy about doing it. You don't want to waste their time at an audit. So you want someone who knows how to do an audit so that they can use the schedules and information that the licensee already has. So it takes some time on the phone to understand what they have available and then use what they have available to do the audit, not requiring them to do a whole lot of work. If you make them do a lot of work, one, there's going to be mistakes, and two, they're not going to be happy about it and you're going to get poorer results. So for audits, we do keep our percentages and we do publish them, and I think a lot of people use our statistics. But in our audits over the last 15 years, I think it is 15 now, 87% of the licensees that we audit have underreported royalties. And you can see the chart on the right that you can see that 13 do report properly, and that's fantastic. But you can also see in that 20% of people underreport by 100%. So if they reported to you 500, it should have been at least 1,000 or more. So 20% of over 100% is kind of a lot. It's a lot more than the people who do it correctly. I also want to say at this, oh wait, that's on this next page. The truth behind underreporting. The whole world is not out trying to get you. Sorry, I don't know who that was. So the majority of underreporting stems from misinterpretation, oversight. There's a definite disconnect from the people who do your license agreement and that who's reporting royalties to you. It's not their whole job. It's just something they do once a quarter. There's employee turnover. And the template roll forward is also huge. That means that they started with the template way back when and continue on with that template and don't add new territories or new products or new anything. So it's just sort of a matter of not attention that leads to underreporting. So our statistics, for every 100 audits performed, 50% underreport sales. 31 have questionable license interpretation, and then you can read down the rest. 20% is disallowed deduction. I was going to go through a little bit more clear about what these mean. So interpretation errors. So like we said, 57 out of 100, 57 have underreported sales. I'm sorry, that's missing to that. So what an underreported sale, it's not on this. I'm going to go back here. Unreported sales means sales that they meant to put in there. It's not that they didn't think they were royalty bearing. It was that they just missed them. They were other product numbers they didn't realize, but it's not that they even thought they shouldn't be royalty bearing. They thought they were reporting them, but they just missed them. The next one for questionable. So of that, 31 out of 100 are questionable, and that represents 44% of the dollars that we find. And the biggest one that has to do with is combination product, which I mentioned earlier. There are lots of times when combination products are being reported and you don't even know it. It's already in their net sales. Other things like the functionality of a product, you would have said, well, it's in there, it's royalty bearing, and they'd say, well, it's not switched on, they're not using it, it's not royalty bearing. Or average pricing over the actual, foreign sales. Purchaser OEM is a big one. They say if it's an OEM or another equipment manufacturer, they say we don't have to pay the royalty. The person we're selling it to is going to pay you the royalties, when in fact they're really not. And then the sell versus service and distributor and sublicenses that we discussed. Missed sales. These are products that they didn't even realize were not being reported, and that's new products, product number variations, subsidiaries, or the whole system's not tagged correctly and it's not pulling the right products for royalties when they do their run to report royalties to you. Disallowed deductions can be large depending on the type of licensee. It's surprising to me the number of places, excuse me, that we go to that just use this lump deduction. They're supposed to be doing very specific deductions, but instead they just say, well, we take 5% off the top because we can't really track our deductions, or we don't want to track our deductions, and we just think that's it. There are a few pharmaceuticals that just take a deduction off of all of them as their ordinary course. And when you audit them, they don't really have a good rationale as to why they do it other than they've always done it that way, and that's what they do. Deductions for allocation of overhead and general business expense can be thrown in there, and they're usually, I've seen very few license agreements that allow for it, nor should you allow for it. And then fees that we talked about that are fees as opposed to deductions. The other benefits, and people don't really think about it this, but if the audit is done correctly, it just opens up a communication between the licensor and licensee and to make sure everybody's on the same page. It brings things to light that it's better to bring things to light sooner rather than later. If you wait till your license is expired, you can go back 3 years, but you've missed, another 10 years of when things were going the wrong way and they weren't reporting correctly that you'll probably never get. So sooner rather than later to get everybody on the same page is probably the best idea. Excuse me. Some clients do audits every 3 years, and it's kind of surprising that they may be the same mistakes or they may be new and different mistakes that still pop up. So if it's a significant license agreement, one and done doesn't always work. Sometimes you need to do a few audits. So the takeaway, specific and tailor your definitions in your license agreement are the most important. I don't have any idea how many people are on this call, but I generally tell when I do any kind of presentation, if people are interested in me looking at their sort of template agreement for things that have to do with royalty reporting, I'm happy to do it sort of at a gratis and give them ideas as an accountant, not a lawyer, as to where they can tighten up their language so they'll have a better time when they audit or hopefully have proper reporting without an audit if at all possible. So not knowing how many people are on this call, I'd be happy to offer that to people, and my contact information is at the end. A compliance program generally helps with underpayment detection, and it's always a good idea, especially because it's what I do for a living. And the fact that we uncover 87% of unpaid royalties in every audit we do seems like a good reason that you should want to do audit. So I think I got through exactly in the 30 minutes I was supposed to, which I never on time, so that's pretty good for me. And I think that we have questions now, or I don't know if we do have any questions.
All right. Yes, we do have some questions, and if anybody has any additional questions, go ahead and type them into the chat box, and we'll get to them here during this Q&A session. So we already have a couple here. The first one is, how often should the royalty audit be performed? You mentioned 3 years. Why is that recommended?
So 3 years is a good time period because that's how long people's records are easy to go through. So people have sort of their general ledger system, and they do archive it, and there's certain tax rules where you have to keep records, I think, for 7 years. But even though they have to keep them, these are your partners, and you don't want to make an audit a horrible, difficult thing for them to do. So if it's 3 years, they can have those records a little more easily available, and the audit tends to go better.
Okay, great. You suggested keeping current with the licensee in the news. I believe you mentioned Google Alerts. Is there any other way to keep track of those news articles or anything?
I think one resource that a lot of people forget about is their inventors. So the inventors, if you're in a university or any kind of research institute, they really keep up with the industry. And the inventors have brought a lot to light about the industry and the licensors that the tech office has generally not known. So that's a really good source. Then there's also industry articles, or, I mean, I think it's difficult for tech offices to stay on top of every industry because you're doing so many. But if you do specialize, obviously sort of the journals in that industry are very helpful.
Okay, perfect. Do you have any suggestions on how to track milestones?
It would be the same thing I just talked about before, which is Google Alerts as well as the industry information and your researchers. But other than that, it is a difficult thing to do. The other way is communication. I think people forget to just ask. I've been asked many times to do an audit. They say, oh, we think it's this, and this whole big thing happened. And my first question is, well, did you call them and ask? And they generally look at me and say, no, I didn't think about calling and asking. But I think that calling and asking should be everybody's first step. I'm happy for you to hire me to call and ask, but I would suggest that you all talk to your licensees a little bit more.
Great. How many audits does your company perform per year? I'm not sure if this is something you're willing to share, but.
Yeah, I don't think we put out the statistics, but a lot. We have a full staff of people in the U.S. and in Asia, and all we do are royalty audits. So if somebody wants to offline talk about more of that, I'd be happy to talk to individuals, but probably not put that number out there on a big
No
call
problem.
like this.
Perfect. How long is an average license agreement?
I guess the average license agreement has to do with the life of the patent. So I don't think there is an average life. It depends when you, you license it, and then if you have extensions or additional patents. I don't really have an answer to that. I'm sorry.
Okay, so definitely varies. Does Infotex IP review license agreements or just perform audits?
Yeah, we are happy to review license agreements, and I mentioned that I generally do that gratis because it doesn't take a lot of time, and we're not lawyers, so it's not something that we can give legal advice on. So I do it for my clients or people who are considering talking to us, sort of as informational purpose as an accountant. So yes, we do.
Okay, excellent. A couple other people had additional questions about different parts of the webinar. You will be getting a copy of the slides, and we will also post on our YouTube channel the full recording of the webinar. So if you missed anything, or if you want to go back and review something some more, and you have any questions that you want to ask Deborah, then you'll get all of this information once the webinar is over. Looks like we've just got a couple more questions just coming in here. Let's see. How does one determine royalty rates?
Sorry, I think that's out of my, we do audits after the rates are already determined. You know, we do see a lot of rates, and I would assume the rates and hope that the rates have something to do with the economic value of your technology associated with the product. But that's not something we generally consult on. I'm sorry.
Right, so I can hop in here. Foresight Science and Technology does perform some royalty rate reports. We do give standards in different industries, and that is something that you could talk to me offline about, and I'll follow up with you on that. How would you perform an audit prior to any amendment to the license that makes adjustments in the financials?
That's a great question, and I think that it depends on what the situation is, but I do think a lot of people negotiate a lot of things without the full information. So you and your licensee have something you're discussing, and you decide to change everything, and you sort of are all working in the dark. So I do think at any major changes to rates or financial terms, it's a great idea to do an audit. I also think there's sort of this industry of selling royalty streams. And I've seen a lot of people sell royalty streams, not even consider doing an audit before they sell that stream, which the person buying the stream from you is quite happy about, because if the stream is not exactly as you thought, if it's underpaid, they're getting a discount, because as soon as they get it, they're going to probably do an audit or hope or talk about it and get the increased stream. So it's always best before any big financial change to do an audit.
Excellent. Okay, it looks like we have all of the questions covered, and as I said before, everybody will get a copy of these slides, and the presentation will be up on our YouTube channel. Feel free to reach out to Deborah if you have any additional questions. Looks like we covered everything here today. Thank you very much, Deborah, for joining us, and I know that I found this very helpful. Hopefully everyone else did.
Thanks so much. I appreciate it.
Okay, have a great day, everyone. Bye-bye.
Bye-bye.